Hello, I'm Liz Lumley of Finextra, and today I'm speaking to Eddie Keal of IBM, and we're going to be talking about the payments cards industry and all the regulations that are affecting that industry right now. So to kind of start us off, what are some of the big global regulations that we should be concerned with right now?
Well, I think the obvious one that's in everybody's minds at the moment is the Payment Service Directive, or the reissue of the Payment Service PSD2. It's generally called, from the European Commission. So that's what's got everybody excited. There's proposals out, so we know broadly what the content is going to be, and that's going to have a massive impact in the payment card industry across Europe. We're really following on from the Durbin Amendment, which is the American version, put out as one of the many parts that we've seen in the Dodd-Frank re-regulation or correction of the regulatory environment in the US. So yeah, PSD2.
So I'm going to move on a little bit to the Durbin Amendment and Dodd-Frank, but just before we move on to the U.S., you mentioned content with the PSD2. Is that following on from what's been going on in the U.S.? Are they copying the Durbin Amendment, or?
Largely speaking, the motivation is the same. It's about transparency in the market. It's making sure that the consumer can see what they're getting. It's about the entire regulatory environment, introducing fairness and transparency. So broadly speaking, yes, it's following on, and we're expecting to see pretty much the same consequences as the Durbin Amendment has made. Okay. That's largely in the space of capping or putting a limit on the interchange fees that arise when a card transaction occurs. That in of itself will deprive the banking industry of something around €1 billion of revenue per year. Or look at it from the other end of the telescope, it's going to save the consumer or the merchant from paying somewhere around €1 billion of revenue.
So then moving to the U.S., what role does the Durbin Amendment have in that in the greater Dodd-Frank regulations then?
Very specifically, it's downward pressure on the interchange fees and the fees that are associated with the payment transaction. I say downward pressure. There's a regulatory cap has been imposed, and that deprives the banks or the let's say the payments ecosystem of some revenue. It saves the consumer some money. It's more attractive in some ways to the merchants. They can pass that saving on if they so desire. But it's very squarely aimed at, yes, payment card industry. And we're expecting it to be exactly the same in Europe, it's quite a major transformation. There's a lot of money involved in that.
Okay, so taking sort of that optimistic side of the coin, how much savings for consumers will you see? Are they seeing in the U.S.?
It will be worth. It depends on the the nature of the card transaction, whether it's debit card or credit card. But we're expecting it to be somewhere around €700 million across Europe that is paid in interchange fees that's at risk, that will be withdrawn, as I say, from the earnings that are associated with payment fees, and that's significant. Now, if the banks and the card processing services wish to preserve those revenues, they need to do it through services other than simply carrying the payment or ensuring that the payment is made. So we're looking for that to be switched. In order to earn those extra revenues, we're probably expecting more value associated with the payment that's delivered through data, information, marketing services, etc. I don't think anybody wants to get painted into a corner, or any payment processor or card issuer, card acquirer wants to get painted into a corner where you're just asked to do the same thing for less. So the industry in Europe, and particularly in the UK, where we have traditionally had more credit card activity than debit card activity, the industry will be looking for other things to do in order to add value to the merchants, who are really the ultimate payers of the bill. That's not entirely fair to say the ultimate, because clearly the consumer is, but the merchants, the last point in the chain where you see a clear invoice for services that you've used.
So we're talking a lot about capping. The idea of capping interchange fees is big news in Europe right at the moment. And you went a little bit about some of the impact that's going to have. Are some of these charges going to be passed on to consumers? And how is that whole ecosystem of merchants and consumers and banks and card issuers? How is that the card interchange fee capping going to impact that ecosystem?
It removes money from the system. It's not a complex ecosystem. The interchange fees are set by the schemes, and originally they were, I think, intended to recognise the difference between the merchant getting the money and the card issuer finally having the card holder pay their bill. Very much these days it's about promoting the use of cards, and a lot of the interchange fees that do pass between one party and the other are in fact used to generate these, or to fund the loyalty schemes, the air mile schemes, etc., etc. Now, if we put a cap on it that says we can only take 0.3% of the transaction or 0.2% of the transaction for debit cards, instead of fees that can be as high as 1%, you can see instantly that the money's just gone. The bill does not arise, the cost is not there, and yet the transaction still has to be processed. So it's a pretty brutal step change. As I say, it's proposals at the moment, but we do expect it to follow what we've seen with the Durbin Amendment, and the outlines and the proposals from the European Commission make that pretty clear. Now, if those payment processors, by which I mean the banking and payment processing ecosystem in totality, want to earn back that money or want to earn the same levels of revenue, they need to provide something other than simply making the money move from one place to another. And that's where it gets really quite exciting. But again, we're looking at probably the merchants spending the money and the value that's added going to the merchants. It's very easy at the moment to look at all of the activity in the consumer devices and the smartphones and the mobile wallets, and that's great.
You mentioned merchants spending the money and merchants adding value. I mean, is this, and all this discussion about regulations affecting this industry, I mean, do we forget the impact the merchants have on?
I think, to be honest, we've always forgotten, we've always underestimated the impact that retailers and merchants have had on the whole payment card industry, indeed the retail payments industry. Nearly every step change, every new introduction of significant technology or process change has been introduced either by the merchants or because the merchants want it, and in almost every case it's actually been paid for by the merchants. I mean, clearly there is a consumer buying something behind the merchant, but they don't see an explicit separate bill for the services they've had. And the merchants and retailers do. So that's why I say it's largely down to them to see value in change.
You think a lot of merchants sort of see the payment as something that finance handles, and it's too techy and it's complicated, and do you think some merchants forget the role the payment has in the sales process?
No, because they know the difference between accepting one card and another. They know that some schemes will charge more for the transaction than for others. They largely know that a credit card will cost them more money to handle than a debit card. They know that it's not worth taking either card unless the transaction value is a certain amount. But no, most of them do understand, but they don't understand in detail. They certainly don't understand, and I'm not talking about the very high-end retailers, the very large retailers who will be doing their own acquiring and so on, but your average shop, restaurant, small business probably doesn't understand the way that the fees associated with the transaction are made up. And they don't know whether they're getting good value or not. They do know that having the ability to take an electronic payment is good for their business, and therefore they're prepared to pay some money for it. The regulator's view is that there should be an awful lot more transparency around that fee and a lot more choice. So that's what they're trying to promote, and that's what we think will cause lots of volatility, lots of new opportunities in this space.
Thank you, Eddie. Thank you very much.
No, thanks, Liz. Thanks for your time.